everybody. I'm Peter Grant with Zaner Metals in Denver. With me, as always, my colleague Peter Thomas in Chicago. Long time no see, my friend. What do you know?
I know we've got some beautiful weather here in Chicago. Welcome to summer. Usually we get the summer doldrums and we see metals sell off this time of year, and we're going to see what happens.
Yeah, well, certainly last week that was the case. At the end of last week, anyways,
Yeah,
as non-farm payrolls came out and beat expectations.
by a
So
mile.
suddenly everybody's ecstatic again about recovery. But important to know, that most of those job gains probably came early in the month of
Yeah,
July,
that's true.
and then as things, the Delta variant concerns, escalated throughout the month. Uh, there may have been a little bit of less hiring, but um, well,
But
let's.
see, you know what? There was a lot of negative stuff that happened. I mean, we had the jobs market was up, Treasury yields jumped up and really surprised a bunch of people. And Fed made comments about tapering, so it was a triple whammy over the beginning of the month, and a lot of pressure came in on the metals market.
Yeah. I wouldn't necessarily call job gains bad news,
Oh,
but
not to me.
bad news for the metals because of the things you mentioned.
Sure,
Um,
exactly
you
right.
know, uh, there is it certainly kind of pushes forward the or brings forward the expectations of Fed tapering.
Yes.
And in fact, Fed Vice Chair Clarita said that
Oh,
he
yeah.
anticipated that the conditions would be ripe for
I thought that was interesting. I'm glad you mentioned
a
that.
rate
Yeah.
hike at the in late 2022. All right, that's still a long ways off in my book, and a lot can happen between now and then.
Oh,
But
yeah.
that's sort of the push and pull of the market right now. Are we slipping back into COVID with lockdowns and
Oh, yeah.
perhaps
We certainly
mask
are in Asia.
mandates
There's no
and
question about that.
yeah, and
Yeah,
and
and that
that
is,
that's a big factor.
that's a huge factor,
Yeah.
and quite frankly, if you think about it, 33% of global production is coming out of China, and they're closing the highways, they're shutting down factories. So we're certainly seeing a reduction in demand of raw and refined materials.
Right. Yeah, they're not playing even with
No, no.
even with a little bit of uptick in COVID cases. They're prepared to kind of start tightening things up there for sure.
Well, the
Um,
Central Committee refers to it as zero tolerance, and they take it very seriously.
yeah, this is not really a virus that plays well for zero tolerance. It's pretty
Yeah.
transmissible. You really can't get to zero.
Somebody
Uh,
sneezes in the room, and what do? They
yeah,
weld the doors shut. I mean, whoa.
yeah. Well,
So
let's jump into gold real quick.
please,
In the month of July, gold was actually up 2.5%.
terrific.
However, early in the month of August here, last week, for example, we were down 2.8%. So we
Yeah,
erased a whole month's worth of gains in really
couple days,
one trading day on, on
couple days
Friday
of trading.
last
Yeah,
week.
absolutely.
We set a 5-week low at 1758.70. And it's that very pretty definitive drop below 1,800 bucks makes the
What's
chart
the
look
number?
not so good. And
No.
as we alluded to early in our conversation here, that was primarily driven on Friday by the non-farm payrolls number that came in at plus 943,000. Market was looking for something closer to 800,000, so it was a beat. And then we saw June elevated as well, revised up from 850,000 to 938,000. The
Okay.
jobless rate dropped pretty substantially, and that's what kind of got yields going higher. That pulled the dollar higher, and obviously that is not
Correct.
a great environment for gold. So
And by the way, ETFs continued like really 6 weeks of selling in the precious metals. So that put a lot of pressure. So
there's quite a bit of market debate on whether we truly are kind of perpetuating this recovery, or whether we're going to have to worry about demand destruction if things start locking down again. I know my kid's school is already saying mask mandated, even regardless of vaccination. They got to have to wear a mask all day, which I'm not too crazy
That ain't
about.
gonna work.
They're not too crazy about it either.
Well,
So
let me ask you something. Where are we at with silver? I mean, we broke some pretty serious numbers here. What do you will you give us an overview of that?
yeah, absolutely. So down 6.1% in July. It was the second
Yeah,
consecutive lower monthly close. And we're not off to a good start in August here. We hit a 4-month low on Friday at 24.19. And so again, pretty significant technical damage to the
yeah,
chart and so forth. And again, I think it's the same thing. Silver had been trading largely like a commodity, but you start thinking
yeah,
about China shutting down, and that's some pretty significant demand destruction, from the solar industry and
yeah.
so forth that you
Well,
got to worry about.
well put.
Yeah.
All those
So
Uyghurs making those solar cells with that slurry they use
yeah,
have been removed from the entire underpinning. So we're looking at the infrastructure bill, which is still dragging along here, and we just got the EV car push. So there's a lot of pent up demand, let's call it, Pete, for silver. And let's, in my opinion, we're gonna see where we probably should be entering this market to meet that demand, because we are consumers, we're not traders, and we are hedgers. So if we're a hedger and we're going to need silver solder to make computer boards, or we're going to have to make chips, the real consumption is going to be coming here soon. So the question is, where do we get our guys and tell them, hey, look, if you need 30 or 40 tons of silver for production, what's the number? I think that's going to be a big job for us.
yeah, keeping a close eye on the March low in silver at 23.76. That's a really
Okay.
important technical level.
Thank you for that.
So we'll keep an eyeball on
Yep.
that. And you mentioned the $1 trillion infrastructure bill that's
Sure.
kind of making its way through Congress and probably
Hmm.
will make its way to the president's desk soon. Keep in mind also that there's a $3.5 trillion domestic spending bill on the table as well.
Yeah.
And at the end of July, the 2-year suspension of the debt ceiling passed, and they
Well, that's
haven't
right.
resolved that yet. So the Treasury Department is implementing extraordinary measures to prevent us from defaulting on our debt. And Lord knows we got a lot of debt, my friend. So we're
Okay.
watching all that, and I would say that could very likely provide some underpinning, at least for the gold market.
Yes.
I mean, that's a big problem. We're fast approaching $30 trillion in debt. We'll be probably beyond it,
Oh
by
yeah.
the time the infrastructure bill and the domestic spending bill gets passed. We'll be over $30 trillion in debt because we ain't got that
Inflation.
money. We're gonna have to
Inflation be coming.
finance.
So what you're saying to me is, in effect, that you want to reach out to Zaner and open your IRA and maybe pick up some gold for a long-term investment against inflation.
Yeah, not a bad idea. I think
Okay.
as we've always said, you average into your gold positions. You just buy
Absolutely right.
regularly as your budget allows, and stash it away.
Stash it away and
So,
don't go crazy. Don't buy too much. Never borrow to buy gold. Be careful with how you put your toe in the water. And it sounds to me like that's the bell you're ringing.
yeah. Shall we move on to the PGMs?
I want to mention one thing which is important to our gold consumers, our users. We represent and we deal with miners, refiners, recyclers. We have projects on the board which are coming to fruition now for gold for late 2021 and 22, and they're all going to come in at the same time. And I put a list together of the larger miners and barracks, the people of the world that do good sized numbers. And we're going to see gold coming in from the following places that we haven't seen in numbers that are huge: in Zambia, Papua New Guinea. Nevada's got some new veins that are opening. Hopefully, they'll be able to hang on to their production permits. Tanzania, and Argentina. These are all new markets that are opening up. So I would say that probably if you have a refinery or you're a refiner, you're going to have a very good year and a half here because we're seeing a lot of new product coming to the market, and I wanted to make mention of that.
Right. And once you have that gold in your refinery, it might be prudent to hedge it.
Well, not only that, remember that when you, let's say, for example, you're in Argentina and you have 200 tons of gold in the ground, you can have your team call us and we can hedge the end price of that and carry it for as long as you need to against production. And you will make your banker or your central bank very happy knowing that you're beta neutral. So I think it's worth mentioning.
Very good.
Okay.
PGMs?
PGMs, baby.
Let's do it.
All right.
Platinum,
Mhm.
kind of taking a thumping.
It is,
It
isn't
was
it?
down 1.8% in July. It was the third consecutive lower monthly close. And similar to silver, not off to a great start. It was down
Nope.
6.5% last week alone, set a 7-month low at 973.50. And it was a fourth consecutive lower weekly close. That 973.50 level obviously puts us pretty substantially below the $1,000 level, which
Oh, yeah.
again has done some pretty significant technical damage to the chart
Well,
and leaves the
China
market pretty
basically said
vulnerable.
their Green Deal, their NO2 reduction, they're just going to push that off the table, and they're firing up their coal now for electricity. So, I mean, they're kissing goodbye all the platinum and palladium they're using to reduce pollutants coming from vehicles right now. So we're not seeing the same demand as production keeps slowing down. You know, we are seeing big problems in South Africa right now. Our friends in South Africa are telling us that that the riots have caused a great deal of infrastructure problems, and it's going to influence their production because mining is a large chunk of their GDP.
Yeah, yeah,
Yeah,
absolutely.
yeah,
Palladium has not fared quite so bad. I mean, it was down 4.1% in
yeah,
July. It was third consecutive lower monthly close, but still well within the range. What I would classify as the COVID range,
sure.
pretty broad range, admittedly. Um, we were down 1.2% last week.
Hmm.
But the midpoint of that COVID range is 2256.20, and so we're
Okay.
still well above that, and it seems to be kind of hanging in there a little bit better.
Well, the thing
Um,
I think to remember, Pete, is this. Look, uh, we, our factors, resistance. Copper has great electrical flow. Well, palladium is used in very high end chips and in missiles and rockets, and people pay up for it, and the demand is still good, and so it hasn't quite felt the same pressure, I think, on the consumption side, Pete.
right. Yeah, and
Yeah,
I think that the picture will brighten for all the white metals if we can get this Delta variant concern
sure.
behind
That
us
includes
and
rhodium too. Yeah,
yeah, and move on
absolutely.
with the recovery.
Hmm.
Um, Copper kind of interesting.
Dr.
Copper
Cuppa,
copper
tell
was
me
up
about it.
copper was up 5.5% in July.
Yeah,
And
big month.
early here in August, it's given a fair amount of that back. It was down
Mhm.
3.1% last week, but
Okay,
still broadly within the range. Well above the $4 level
that's a
still.
very valid point. Yeah,
Yeah,
well above $4. I know our scrappers who, by the way, we are United Metals Recycling is doing a new show on platinum palladium on PGMs every Monday morning. All of our scrappers that are watching us now, you want to dial them in. Nick's doing a great job with that. We've been fortunate enough to contribute to it a couple times now. So if you want to know what's going on with your AutoCats and the value of your AutoCats, that's the place to go. So I just wanted to give him a little plug. They're great people over there.
yeah.
Yep.
So I guess the big concern with copper would have to be, how things develop in China.
Yes.
If they really do go into kind of lockdown mode, that does not bode well.
Well, it
Uh,
accounts for 61 to 63% of all the copper in use. So that's a pretty big number, my friend.
yeah, for sure.
Yeah.
So we'll definitely be keeping an eyeball on that. But at this
Yeah.
point, anyways, the trend is still up, in my opinion.
Well, let's put it this way: demand is still strong globally, but you hit the nail right on the head. You remember 40%, which is a pretty close number, I believe, is what the Chinese are consuming for their usage for electric lights, for washing machines, for their construction of cars, all the things that everyone uses copper for. If they start shutting down and we start to see, and we saw it just recently, their copper stockpiles increasing, we're going to see some pressure come in on the copper as well, my friend.
Right,
Yeah.
right. All very pertinent things to watch.
Yeah.
I think we've definitely covered all the bases. Um,
Okay. I
we
think that wraps up July pretty well.
Yeah, yeah, and we're gonna try and do these more on a monthly basis now. We had been doing weekly videos, and um, we've been so busy that
It's been
monthly seems
crazy.
to fit into our schedule a little bit better, I think.
It absolutely has been crazy at Zaner, and between all the things that we provide, our miners, our recyclers, our scrappers, all of our and then it's just we're like everybody else. We could use a few extra hands. I mean,
Yeah,
it's just because we've been busy. But I'm not
absolutely.
complaining.
Not complaining. All right, my friend. I am Peter Grant with Zaner Metals in Denver. Look
Pete
forward to
Thomas in
seeing you again.
Chicago. So glad to see you. Thank you for coming by.